Google searches for VA construction loans have just spiked by, get this, 67,300%.
Yeah, and I mean, that is not a typo, 67,300%. It's just a seismic shift in search volume that literally happened almost overnight.
Welcome back to the Deep Dive, everyone. And today we are tailoring our mission specifically for all of you construction business owners out there tuning in to Scaling Legends. So if you own a construction firm, you know you are constantly scanning the horizon, looking for where the market is moving next.
Right? Oh, absolutely. You always have to be looking ahead.
Right. And well, right now it is moving squarely toward 19 million veterans in America who have just been handed the keys to what is probably one of the most powerful financing tools in real estate history. I mean, we are talking about the ability to build a custom home from the ground up with zero down payment.
Wow.
Yeah, zero down, no private mortgage insurance, and access to up to $2 million in funding.
It is an absolutely unprecedented opportunity. I mean, not just for the veterans who have, earned this benefit, but specifically for the builders who actually understand how to serve them.
Exactly.
Because the Veterans Affairs Administration, they officially launched this brand new nationwide single close construction program back in August 2025. And right now, contractors across the country are just scrambling to understand exactly what this means for their project pipelines.
Which really brings us to our mission for this deep dive. We are going to unpack exactly how this new program works under the hood, look at the specific financial mechanics involved, and basically lay out a strategic blueprint for why you need to pivot your operations to serve this rapidly growing market right now.
Yeah, you really don't want to miss the boat on this.
No, you don't. Okay, so let's unpack this August 2025 game changer. Because to understand why we're seeing this massive 67,000% spike in interest right this second, we really have to look at what the old system was like.
Right. Historically, if a veteran wanted to use their VA benefits to build a custom home, it was a logistical nightmare for everyone involved.
Whoa, a total nightmare.
Yeah, but the builder usually took the brunt of it. Because the old system, it forced the buyer to secure two completely separate loans.
Right.
First, you had the short-term construction loan, which typically had much higher interest rates.
Yeah.
And that was just to actually fund the physical build itself.
Just to get the shovel in the ground.
Exactly. Then, once the house was finished and, the final nail was driven, the buyer had to go through a completely separate underwriting process to secure a permanent VA mortgage to pay off that initial construction loan.
Which introduces an insane amount of risk. I mean, under the old system, building a custom VA home was like it was like building a house, but having to buy the foundation and the framing at two completely different stores, right?
Mm-hmm.
With two different checkout lines and two different credit checks.
That's a perfect way to describe it.
You were basically floating a 6-month bridge loan on your own life savings, just praying the veteran didn't get laid off or, I don't know, buy a new truck and lose their mortgage eligibility right before the paint dried.
Yeah, buying a truck right before closing is the classic deal killer.
It happens all the time. And you are taking on nearly all the market risk. If the buyer loses their job during the 6 months it takes you to build the house, suddenly they can't qualify for that second permanent mortgage. And you, the contractor, are left holding the bag on a custom home that you now have to try and sell on the open market just to recoup your costs.
Exactly. And the friction was just so high that many builders simply refused to do VA builds altogether. They just say no.
Right. It just wasn't worth the headache.
But what changed on August 6, 2025, is that the VA finally rolled out the single close program. And it's exactly what it sounds like. It's one loan to rule them all.
One seamless process.
Yes. The veteran applies once, they go through underwriting once, and they close once before a single shovel even hits the dirt. That single loan automatically converts from a construction loan right into a permanent 30-year mortgage the exact moment you hand over the keys.
It is a massive removal of friction, just huge. And the terms for the buyer are incredibly favorable. We mentioned 0% down and no PMI, but let's talk about the actual limits. Because they can get approved for up to $2 million.
You can, yeah.
But there is a crucial caveat here that you need to know. Any build over $766,000 does actually trigger a down payment requirement.
Yes, and understanding that threshold is critical for your sales team. You really have to train them on this. The zero down benefit is capped by the VA's guarantee limits, which sit right around that $766,000 mark.
Though I think it varies slightly depending on the county you're building in, right?
It does, yeah. County by county, it shifts a bit.
Yeah.
But if a veteran wants to build a $1.5 million home, they absolutely can. They just just have to cover a percentage of the difference between that guarantee limit and the total build cost.
Right, they just have to bridge that gap.
Exactly. But even with that caveat, you are looking at buyers who have significantly more purchasing power than your standard conventional loan applicant.
Oh, completely. And the financial specifics are just highly competitive right now. The average 30-year permanent rate sits at around 6.22%, and the construction rate, meaning the interest charged during the actual physical build phase, that's hovering around 8.5%.
Which is very solid for construction paper right now.
It really is, and lenders are looking for a very reasonable minimum credit score of, I think, 620 to 640. But I have to admit, I'm a bit lost on one of these numbers, and I bet a lot of you listening are too. There's this VA funding fee that ranges from 1.25% to 3.3%, depending on the veteran's service history and whether they opt to put any money down.
Right, the funding fee.
Yeah, so if the loan is truly zero down, where is that 3.3% funding fee coming from? Like, do I, as the builder, have to eat that cost? Or does the veteran have to suddenly bring, 20 grand in cash to the closing table?
That is a great question, and honestly, it's a very common point of confusion. The short answer is no. Neither of you has to bring cash to the table for that fee.
Oh, really? Okay.
Yeah, the VA funding fee is simply rolled right into the total loan amount. It's basically a mechanism the VA uses to fund the program and keep it running without relying entirely on taxpayer dollars.
Ah, got it.
So if it's a $500,000 build with a 2% funding fee, the total loan amount just simply becomes $510,000.
Yeah.
The veteran finances it over the 30 years, and it doesn't impact your construction budget or require any out-of-pocket cash at closing.
Okay, that makes total sense. So the buyer gets to keep their cash in their pocket. And if we zoom out and look at the psychology of the buyer right now, traditional buyers are kind of just sitting on the sidelines.
They really are.
They are intimidated by fluctuating interest rates and these massive down payment requirements. The VA single close program effectively bypasses those traditional roadblocks for 19 million eligible Americans.
Which leads us directly to why the contractor needs to care about this.
Right. So what does this all actually mean for you, the construction business owner? Like, it's obvious why this is a fantastic deal for the veteran, but why should you completely shift your company's focus, retrain your sales team, and adjust your operations to target this specific niche instead of just sticking to your traditional residential builds?
Well, according to Smart Business Automator's Market Intelligence Report, residential construction is down 9%, but the VA segment is growing.
That is the crux of the entire issue right there. General residential is contracting. We are all feeling that 9% dip across the industry.
How everybody's feeling it.
Leads are getting way more expensive, bidding wars are getting way tighter, and profit margins are shrinking on traditional custom homes because those buyers are just stretched way too thin.
What's really fascinating here is the strategic advantage this presents. Because when the broader market is in a slump, pivoting to a government-backed, highly incentivized, and surging niche is just the smartest way to keep your pipeline full and your crews working.
It's just smart business.
Exactly. You aren't fighting over a shrinking pie of conventional buyers who are haggling over every single cabinet upgrade. You are tapping into a rapidly expanding pool of highly qualified, fully funded clients.
So let's talk about the operational reality of that funding, because I think there's a massive aha moment here for builders regarding cash flow velocity.
Absolutely. Let's run the numbers on a real-world scenario. Take a standard $350,000 custom build. In a traditional conventional loan scenario, getting that $350 K funded usually means the buyer is draining their savings for a 20% down payment.
Right, that's $70,000 in cash just to get the bank to even look at them.
Exactly. And then you are constantly waiting on the bank to approve disbursements. It drags on. But under the VA single close, that $350,000 build is fully covered. Because the loan closes before breaking ground, that entire $350,000 is sitting in an escrow account, fully guaranteed by the lender and backed by the federal government.
Which completely changes how you manage your subcontractors. Because that escrow is pre-funded, you aren't chasing a client for a check after the drywall goes up, hoping they didn't spend their reserve cash on a new boat.
Which happens.
It happens all the time. But here, you have guaranteed cash flow. You can go to your favorite plumber or electrician and say, hey, I can guarantee you a net 15 payout instead of a net 60 payout because the money is literally already sitting in a VA-backed escrow.
Yep. And suddenly you get priority scheduling.
Exactly. Your subs are happy, and you can often negotiate better subcontractor rates just based on the reliability of your payments.
That is the cash flow velocity advantage right there. The risk of client default mid-build is virtually eliminated. And I mean, having that kind of financial security during a broader 9% market slump is incredibly valuable.
Okay, so I love the guaranteed cash flow. You're basically swimming downstream while everyone else is trying to paddle against the current. But let me play devil's advocate here for a second, because I know exactly what the experienced business owners listening are thinking right now.
Let's hear it. Government work. Those two words usually send shivers down a superintendent's spine. I'm picturing massive red tape, endless delays, and inspectors who get a kick out of halting projects. So I have to ask, is the hurdle of getting VA Builder approved and dealing with these strict government inspection schedules actually worth the hassle?
It's a completely valid concern, and we really shouldn't sugarcoat it. Let's walk through the reality of getting approved and the nitty-gritty of the actual build. Because first of all, you can't just wake up tomorrow, hang a shingle, and start a VA single-close project.
Right, they don't just let anyone do it.
No, they don't. You, as the contractor, must either become explicitly VA approved through their portal, or you have to meet very specific lender criteria to be vetted for the project.
So there's a very real initial administrative hurdle there. You have to prove you are licensed, insured, and basically have a track record of financial solvency.
Yes, you have to submit your financials, your background, and your licensing. But here is the critical perspective shift. That hurdle is actually a massive competitive moat for your business. Oh, I see what you mean.
Yeah, because not every contractor is going to bother getting approved. They're scared of the paperwork. So by doing the upfront work, you immediately thin out your competition. You lock out the fly-by-night builders.
Okay, that makes a lot of sense. It's a barrier to entry that actually protects your margins. I like that. But what about the operational realities once the shovel actually hits the dirt? You mentioned strict inspection schedules. How is a VA inspector different from, say, my local municipal inspector?
Well, this is where you really need to understand the why behind the rules. The VA isn't just handing over a check. They are guaranteeing the asset itself. Therefore, disbursements are tied directly to scheduled inspections at very specific milestones, usually foundation, framing, mechanicals, and final.
That sounds fairly standard, though.
It is, but VA appraisers and inspectors are looking for what they call minimum property requirements, or MPRs.
MPRs, okay, what exactly does that cover?
The standard is that the home must be safe, structurally sound, and sanitary. Now, a local city inspector might look at a missing handrail on a 3-step porch, or maybe slightly negative grading away from the foundation, and say, hey, just promise me you'll fix this before the buyers move in, and then they pass you anyway.
Right, they let it slide on a promise.
A VA inspector will not let it slide. If the grading isn't exactly to spec to prevent water pooling, or there's an issue with the roof flashing, they will instantly freeze your draw schedule until it is completely rectified. They just do not do promises.
Wow. Okay, so the strictness comes from the fact that the federal government is ensuring the asset is pristine before they back that 30-year mortgage, which means you also really need to learn to work with VA-experienced lenders.
Oh, absolutely.
I imagine if you use a local credit union that doesn't understand the August 2025 single-close rules yet, you're going to hit a brick wall. Partnering with a lender who knows the program inside and out is critical for keeping that strict draw process flowing smoothly.
Exactly. So yes, there is red tape up front, and the quality control is very stringent. But guaranteed funding, zero risk of the buyer failing to qualify later, and a massive underserved client pool of 19 million people. I mean, that makes it worth every ounce of effort to get VA approved and master those MPRs.
But this raises an entirely new operational problem. Let's say you take this advice, you pivot, you get VA approved, you start marketing to the local veteran community, and suddenly, because there is just so much pent-up demand, you land 5 new custom builds in a single quarter.
Which is a fantastic growth trajectory, a great problem to have.
It is. It's a great problem. But tapping into a massive new market means an influx of projects, which historically means a tidal wave of paperwork. You have strict VA compliance checks, endless requests for information, daily logs, and these complex draw requests. If you aren't careful, that administrative burden can completely choke a growing construction company.
Well, if we look at Smart Business Automator's Market Intelligence Report, it emphasizes how tracking budget variances and cost movement is critical when scaling into a new segment.
Right, because the margins are tight.
Exactly. You are dealing with strict VA appraisals and absolutely fixed budgets. You just cannot afford to lose track of change orders or let schedule delays eat into your profit margins, because the VA does not easily approve budget increases mid-build.
Here's where it gets really interesting, but I have to push back a little bit on this. We're about to talk about how to handle this growth, using modern AI-powered platforms built specifically for construction.
Yes, the tech is amazing.
But wait, if I just landed 5 VA builds, my superintendents are running around with their hair on fire trying to coordinate concrete pours and lumber drops. Telling them to adopt the new AI platform right now sounds like adding a massive learning curve to a literal house fire. How does a superintendent actually adopt this technology without it slowing them down even more?
That's a very fair point. But the key is that modern construction AI doesn't force your superintendents to learn some complex new dashboard. It works in the background to automate the administrative tasks they already hate doing.
Okay, give me an example.
The first major hurdle is always document control. With VA builds, you have an absolute mountain of plans, permits, RFIs, and daily reports. Smart document organization automatically reads, tags, sorts, and categorizes every single photo and permit as they're uploaded.
So no more dragging and dropping into endless folders.
Exactly. Your team isn't digging through nested email folders trying to find a specific grading permit while a VA inspector is standing right there on site tapping their watch. They find what they need instantly on their phone.
It's essentially like having an invisible, hyper-organized administrative assistant who just never sleeps.
That's exactly what it's like.
And think about the daily logs. In the old days, project managers would spend, 2 hours every Friday in the trailer trying to write up recaps from chicken scratch notes taken in the field.
Oh, the worst part of the week.
With these tools, you have daily log and meeting summaries. The superintendent just talks into their phone, and the system takes those rambling field reports and automatically turns them into clear, formatted summaries with key takeaways and action items.
Exactly. It completely removes the friction. And when you are managing multiple government-regulated builds, the risk of a stack gap is incredibly high. So document intelligence and compliance checking are vital here. Let's go back to those tricked VA minimum property requirements we talked about earlier.
Right, the MPRs.
Right, because the VA has incredibly specific grading and elevation requirements. If your crew misses a single line in the specs, you are tearing up freshly poured concrete.
Oh, that is a nightmare.
It is. But an AI compliance checker acts like an overlay. It instantly compares the VA's PDF requirements against your architect's CAD file to flag elevation discrepancies or missing handrails before you even pour the foundation. It catches the missing items while they are still just lines on a screen.
That is a total margin saver. I mean, tearing out concrete because you missed an MPR detail is absolutely brutal. And let's talk about RFIs. Requests for information. They are the bane of every project manager's existence.
Oh, absolutely.
And an RFI for a VA build isn't just a quick text message to the architect, right? It needs to be formal, and it often needs to reference the specific VA spec code. An AI platform provides RFI assistance by generating draft responses using the historical context of the project documentation. It dramatically speeds up that formal communication between the architect, the VA-approved lender, and the field crew.
And you also have to consider schedule risk detection and change order impact analysis.
How does that work?
Well, the system constantly reviews your schedule and project activity to identify bottlenecks early. So if a change order comes in, say the veteran decides they want to upgrade the HVAC system to a more energy-efficient model.
Which happens constantly.
Always. The AI evaluates exactly how that change will affect the overall timeline and the strict fixed budget constraints of the VA loan. It allows your leadership team to make data-driven decisions on whether to approve that change order without jeopardizing the final VA appraisal.
Plus, the technology uses API integrations to connect smoothly with your existing accounting software and ERPs. So the information just flows seamlessly from the field right to the back office without anyone doing manual data entry.
Exactly.
So to answer my own earlier pushback, your project managers actually can handle multiple VA single close builds without getting buried. The technology allows them to stay out in the field managing the physical quality of the build rather than sitting in a job trailer pushing paper and fighting with spreadsheets.
And that is really the ultimate goal here. The VA Single Close program isn't just a new loan product. It is a strategic blueprint for scaling your construction business during a broader market slump. You have the opportunity to capture a highly motivated demographic with guaranteed funding, but you can only do it profitably if your back office operations are efficient enough to handle the specific regulatory requirements of government-backed builds.
We have covered a massive amount of ground today. From the mechanics of the new August 2025 Single Close program removing the risk of buyer default, to the strict reality of VA minimum property requirements, to the exact operational strategies and AI tools you need to manage the influx of new work without drowning in administration.
It's a lot to take in, but I want to leave you with one final strategic thought to consider as you map out your next quarter.
Let's hear it.
The veteran community is incredibly tight-knit and fiercely loyal. They talk to each other, they share resources on forums and at local chapters constantly.
Word travels fast.
Very fast. If you take the time to successfully navigate this VA process, clear the administrative hurdles, and build a fantastic high-quality home for one veteran, word of mouth will spread faster than you can possibly imagine. You aren't just winning one single contract. You are building a compounding referral engine within a community of 19 million Americans who all have access to the exact same $2 million zero-down benefit.
If you know a contractor who is looking to fill their pipeline and navigate the current residential slump, send them this episode. It could help them tap into a massive, rapidly growing market. Hit follow on whatever app you're listening on so you don't miss tomorrow's intel. And to learn more about scaling your operations without drowning in admin, visit smartbusinessautomator.com.